Welcome back! Today we're doing a rapid-fire analysis of 13 under-the-radar stocks and crypto projects. We'll break down what each company or project does, their recent performance, and the risks and rewards. This isn't about buy or sell signals, it's about giving you the info to make your own decisions. We'll cover fundamentals, market sentiment, and risk profiles for each asset. If you like deep dives that help you navigate investing, hit that like button and subscribe. Let's jump right in with our first company, Linkhome Holdings. Linkhome Holdings, trading under the ticker LHAI, is a micro-cap Chinese real estate company that has recently caught the attention of speculative investors. The company's core business revolves around property leasing and management, operating primarily in China's rapidly evolving urban markets. They focus on acquiring, renting out, and maintaining residential and commercial properties, aiming to generate steady rental income. While this business model is tried and true in many markets, the current environment for Chinese real estate is anything but predictable or stable. The entire sector is under immense pressure, with headlines dominated by debt crises, government crackdowns, and ongoing regulatory uncertainty. Many developers are struggling to stay afloat, and investor confidence has been shaken. LHAI's stock price reflects this turmoil, showing extreme volatility and wild price swings. Much of the trading activity appears to be driven more by short-term speculation and market sentiment than by the company's actual financial performance or fundamentals. For most investors, this makes LHAI a high-risk, speculative play that could result in significant losses if the market turns against them. Unless you have a strong stomach for risk, a deep understanding of the Chinese property market, and a firm belief in a potential rebound, it's wise to approach with extreme caution. The potential for loss is significant, and many investors have already experienced sharp declines in value. If you're seeking steady, reliable growth, you'll likely want to look elsewhere and consider more stable sectors or diversified portfolios. Aeye, ticker LIDR, develops LiDAR tech, the eyes for self-driving cars. Their four-sight system combines LiDAR and cameras aiming to mimic human vision for safer navigation. The autonomous vehicle market is huge, but competition is fierce and profitability is distant. Aeye is burning cash and must prove its tech is superior to survive. Investing in LIDR is a speculative bet on both their technology and the timeline for self-driving adoption. High risk, high reward, but a long uncertain road, only for those comfortable with volatility. Healthcare Triangle, or HCTI, is a technology company focused on transforming the healthcare and life sciences industries through advanced cloud solutions and data analytics. Their mission is to help organizations harness the power of digital transformation, making healthcare smarter, more efficient, and ultimately improving patient outcomes. HCTI works closely with hospitals, pharmaceutical companies, and research institutions to migrate sensitive data to the cloud, analyze vast amounts of medical information, and ensure strict regulatory compliance. Their services enable healthcare providers to make faster, data-driven decisions, streamline operations, and enhance patient care. The healthcare IT market is enormous and expanding rapidly, with major players like Amazon, Microsoft, and Google investing heavily. HCTI, however, is a much smaller company competing in this space, facing significant competition from these tech giants. As a result, HCTI's stock has been highly volatile, with frequent price swings reflecting both the company's execution challenges and ongoing market skepticism about its ability to scale and compete effectively. The company's vision is compelling and the market opportunity is huge. Even capturing a small share of this multi-billion-dollar sector could be transformative for HCTI's future. For investors, HCTI represents a classic high-risk, high-reward scenario. Success will depend on flawless execution, innovation, and the ability to stand out in a crowded field. As always, proceed with caution and do your due diligence. MDT, or Measurable Data Token, is a blockchain-based project that aims to change the way we think about personal data. Instead of letting big tech companies profit from your information without your consent, MDT lets users take control and actually monetize their data. By sharing your data anonymously, you can earn tokens in return, creating a new kind of digital economy where your information has real, tangible value. One of MDT's main products is the Reward Me app. This app rewards users for sharing their e-receipts, which are then aggregated and sold to businesses for market research and analytics. It's a way for everyday people to benefit from the data they generate through normal shopping, while businesses get valuable insights into consumer behavior. The concept is especially relevant today, as concerns about data privacy and ownership are at an all-time high. Many people are looking for ways to protect their information, and MDT offers a solution that puts users in the driver's seat, letting them decide what to share and when. For MDT to truly succeed, it needs mass adoption, millions of users willing to share their data, and a strong demand from businesses eager for these insights. The more people who participate, the more valuable the ecosystem becomes for everyone involved. Of course, it's a risky bet. MDT is entering a competitive space, going up against established companies and platforms that already dominate the data economy. There's no guarantee it will succeed, and the project faces significant challenges from both competitors and regulators. The price of MDT tokens can be highly volatile, and the project's future depends on its ability to scale up its user base and attract more businesses. While the idea is innovative and has potential, it remains speculative at this stage. If you're considering investing, make sure you believe in the vision of a user-driven data revolution, because that's what MDT is ultimately all about. IDEX is a hybrid DEX, combining order book trading with self-custody. It offers speed and advanced features like limit orders, aiming to bridge the gap between centralized and decentralized exchanges. The IDEX token lets users stake, run nodes, and earn trading fees. Success depends on attracting trading volume and building deep liquidity. The DEX space is brutally competitive, with many strong rivals. IDEX's multi-chain expansion helps, but execution is key. It's a bet on the future of decentralized trading. High risk, high potential if they can stand out. Polkastarter is a launchpad for new crypto projects, specializing in IDOs. Investors need to hold POLS tokens to participate in early-stage token sales. The platform's value depends on the quality and hype of projects it launches. In bull markets, returns can be huge. In bear markets, activity dries up. POLS is a cyclical investment tied to overall crypto sentiment. Success relies on Polkastarter's ability to attract top projects. High risk, high reward, and very market dependent. Not for the faint of heart. Maple Finance brings under-collateralized lending to DeFi, targeting institutions. Lending pools are managed by professionals who vet borrowers and set terms. The Syrup token gives holders governance rights and a share of protocol revenue. The opportunity is huge, on-chain corporate debt, but default risk is real. Major borrower failures could wipe out pools, as seen in past crypto crises. Success depends on effective risk management and attracting institutional players. Syrup is a high-stakes bet on DeFi's evolution, only for those who understand the risks. Axelar, with its AXL token, aims to connect blockchains for seamless cross-chain transactions. It enables apps and assets to move freely between networks like Ethereum, Avalanche, and Cosmos. Validators secure the network, and AXL is used for staking, fees, and governance. The potential is massive. True Web3 interoperability. Competition is fierce, with rivals like Layer 0 and Wormhole. Success means becoming the backbone of the multi-chain future. AXL is a bet on Axelar's tech and adoption, high risk but high infrastructure upside. Metaplex powers NFT creation on Solana, providing tools for creators to mint and manage collections. The MPLX token decentralizes protocol governance, letting holders vote on upgrades and features. Value comes from Solana's NFT activity, not individual NFT prices. If Solana and NFTs thrive, Metaplex benefits. Risks include competition and NFT market volatility. MPLX is an infrastructure play in a niche, fast-moving space. For believers in Solana NFTs, it's worth a look. Blocklords is a blockchain-based medieval strategy game with a player-owned economy. Every in-game asset is an NFT, and the LRDS token powers the game's economy. Success depends on attracting and retaining real gamers, not just crypto speculators. The play-to-own model is promising, but execution is tough in gaming. LRDS's value is tied to the game's popularity and engagement. High risk, high reward, if Blocklords becomes a hit. It's a speculative bet on blockchain gaming, only for those who believe in the project's vision. AXL is a wrapped version of the AXL token, allowing it to be used on other blockchains like Ethereum. It's always backed one by native AXL, enabling cross-chain DeFi participation. AXL isn't a separate investment, it's a tool for liquidity and utility. Its prevalence signals demand for AXL and DeFi. Watch AXL usage as a health metric for Axelar's ecosystem. You don't invest in AXL directly, it's all about expanding AXL's reach. Inverse Finance, with its INV token, offers lending and a decentralized stablecoin, DOLA. INV holders govern the protocol and benefit from buybacks. The protocol has suffered major hacks, losing tens of millions and damaging trust. Security improvements are ongoing, but the risk remains high. Success depends on regaining user confidence and growing DOLA adoption. INV is a high-risk turnaround play. Only consider it if you're comfortable with DeFi's wild side. The skeletons in its closet are real. Convex Finance, with its CVX token, maximizes yields for Curve liquidity providers. It aggregates CRV, locks it for maximum rewards, and shares fees with users. Convex controls a huge share of Curve's governance, dominating the Curve wars. CVX value is tied to Curve's health and trading volume. It's a powerful system, but any threat to Curve is a threat to Convex. CVX is a leveraged bet on DeFi's core infrastructure. High potential but tightly linked to Curve's fate. For DeFi diehards only. That's our whirlwind tour of 13 stocks and crypto assets, each with unique opportunities and big risks. There are no guaranteed winners. High rewards come with high risk. Always dig deeper than the hype, and never invest more than you can afford to lose. Which asset do you find most compelling or risky? Let me know in the comments. If you found this helpful, like and subscribe for more deep dives. Thanks for watching. See you next time.